Hello, everyone. You're welcome to today's podcast. Thank you so much for joining. I see a lot of people on the comment section. Thank you for responding to my questions. And today we are going to be discussing the issue of a tax system in the United States. So there's been a lot of questions from our members, especially those who are in the United States already, asking about how to file taxes correctly and how to be able to do, just to do their due diligence, learn and listen, and just know about the tax system of the US. And today, I brought you guys someone who is very, very well experienced in the tax, knowledge tax industry. He has been in this for more than 2 decades. He's been helping filing taxes. He himself has been an accountant from Nigeria, and before he immigrated to the United States, that's about very long time ago. I don't know how long he immigrated to the United States, but ever since he came here, he has been also a tax person, like a tax specialist. So he's been helping and filing taxes. He has a company of his own, and the name, if I remember correctly, is Realty Taxes and Bookkeeping Services. I don't know if I mixed that up, but something like that. So he has been my company for sure. He's been our company person, CPA, and also he has also helped a lot of other people that I know. He came highly recommended, and I believe that some of the knowledge that he's going to be impacting on you guys today will be worth it, especially those of you who are already en route to the US, or those that are already in the US. You will be benefiting greatly from this show. So I want to welcome everyone, and I have a lot of people on the waiting room. I'll be letting them join as soon as I end the introduction. So Mr. Ade, you're welcome to the program today. God bless you. Thank you for joining us, and I would really appreciate, out of your busy schedule, finding out time to be with us today. And just to let you know, most of the people that we have here, in fact, all the people that we have on this show today are all registered nurses, majority of whom are either in the United States or already currently en route or coming to the United States. So they have been asking questions about the United States taxing system, how to just stay on the good side of the law, not, tax credit, understanding what tax is, just a little basic knowledge about tax, how to be right with your taxing, what the US taxing system actually represents. So I believe that you are the right person to be able to give them the correct information about this. So I'm going to let you just go ahead and give us all that. My people like to ask questions a lot. So we would make it more interactive at the end of your presentation, just for them to kind of ask questions and clear some of the area, some gray area that they have. So today, you have a majority of, like I said, many of whom, of those that are here are registered nurses. So you're welcome, sir. Thank you. How are you doing today?
I'm doing good. I'm doing good. Thank you so much for having me. Thank you so much for having me.
Glad that you were able to attend, come to our show today. We're really happy.
Thank you.
All right, sir. So you can just, go ahead and give us some intro.
All right.
Go from there, sir. Thank you.
Okay. I want to appreciate everyone for being here. My understanding is that people from different parts of the world, not from US. Initially, I thought I would only be talking to US um, attendees, but during your introduction, I realized there are other people, also from other parts of the world, especially Nigeria, they're in the process of coming over here. And I think they may not understand how important this is, especially people that are coming, from Nigeria to US. They may not understand how important today's lecture is until when they arrive here, they probably will call you back and say, well, thank you. Before I proceed, I want to introduce myself. Like you said, I've been in this business. My name is Adebayo. I've been in this business for almost 20 years. I've been an accountant from Nigeria. So when I moved here, that's the same year I moved here, which almost 20 years ago. I started, started the tax. I went into tax immediately. because far back in Nigeria, tax has been also one of my niche. So as soon as I moved here, and I decided to just go straight. And more also because before moving here, I've realized that the most complex tax system in the entire universe is American tax system. And I know that if you want to go far in this country, one of those things that you need to know is information. And one of the informations you need to really know is the tax system, how the tax system in America work. Like I said, it's the most complex tax system in the whole world. As a matter of fact, it's the most complex accounting system in the whole world. All other countries have what we call a standard of accounting standard that all other countries use. Only America has a separate accounting standard. And the same thing, some tax code, of other countries, you can see few similarity. But America stand alone. And when you understand this country, you will realize this country is all about being alone. In America doesn't believe if you are not buying American stuff, they don't buy your stuff. So it's cut across everything they do. So the same thing, the tax system. In fact, American tax system is over tax codes. It's over 14,000 pages. Over 14,000 pages. It's the most complex, in the world. But when you understand that tax system, it's something that will benefit you. The difference between you working and keeping as much as you are earning in this country is understanding the tax system. Now, because I understand that there are other people from other parts of, especially from Nigeria, I'm just going to take a few minutes just to go through, just give you overview of the tax system so I can welcome as many questions as you guys have, because there are other people that are just coming in here. And for the sake of people that are here too, even after this program, if you still need to reach out to me, you can get my contacts from the director, and you can reach out to me. So basically, like I said, American system is very complex. But when you understand the system, you can use that system to your advantage. You can use that system to your benefits. But if you don't understand it, it can beat your detriment. There are a lot of people over the years. I've seen people, making so much mistakes, in America, and unfortunately, the law, the law does not. There's an ignorance of the law. It's not an excuse. The fact that you made a mistake in your tax filing does not exonerate you from the consequence that comes after that. So you better know what you are doing. And also, not just know what you are doing, know if you are giving your taxes to people to do it for you, you better, number one, understand that those people that handle your taxes know what they are doing. But number two, you also understand what they are doing, because if they do your taxes on your behalf and there's an issue with that taxes, the consequence come directly to you, not to your preparer, not to your tax advisor. Even if they break the law, the initial consequence comes to you before the law can take its hold on those, on the preparer. And I have seen so many people that have given taxes to people that just make things up for them. And eventually, after the years, they get into trouble. And the way the system works is the tax that you filed the last 7 years, you are not free yet from that. The law gives IRS the right to go after you any taxes you filed the last 7 years. If they find out there's something, they can still come back to the taxes you filed the last 7 years to make an inquiry. And if they find out that you have actually issue with the taxes, there's something called tax evasion, there's something called tax avoidance. Tax evasion is you completely hiding some tax information in order to avoid paying taxes. That's a crime in America. You commit that, you do that, that person goes to jail. And it depends on the gravity of what you are hiding that will determine the term of the year. So tax evasion is a grievous offense in America. You make money and you refuse to disclose that. You are hiding it. You refuse to disclose that. It's called tax evasion. For the sake of people coming over here, please, I want to encourage you. There's no shortcut to American tax system. In fact, there's no shortcut to American system. Not just the tax system, the entire system. There's no shortcut. If somebody tells you, "Oh no, you can take this shortcut," guess what? You take that shortcut. It's a matter of years. That shortcut will catch up on you. It will end up becoming a long, cut. I always tell people in America, you can only hide. You can only run, you can't hide. You can only run, you can't hide. You run for 10 years. Once they have your time, they will pick you up. And so, please, I want to encourage you. Don't let anybody advise you to cut corner. Don't let anybody advise you to take a shortcut when it comes to American tax system. And like I said, tax evasion is a crime. Now, there's something called tax avoidance. Now, tax avoidance is you using the American tax system to your advantage in order to reduce your tax liabilities. That is not an offense. That is not a crime. That is allowed by the law. It's called tax avoidance. That means that you understand the tax system and you use that tax system to your advantage. Now, as complex as American tax system may be, there are over 400-500 loopholes in the system. The loopholes are kept there for a reason. So the loopholes are there, but they are not there in gray hair. You have to understand the system to find out the loopholes and which loopholes is applicable to which occasion or to which transaction. And so the loopholes are there. So you understanding that loopholes and using that loopholes to reduce your tax liability or maybe to eliminate it completely is okay. It's allowed by the law. It's called tax avoidance. And so that is why this program today is so important to you, because you want to understand that, you can have two people making the same income, having the same situation, and yet paying different tax rates. What makes the difference is the understanding of what I just mentioned now, the tax system. If one understands that system, then that can use that system to his or her advantage. But if you don't, then there's a tendency that everything you make, it goes straight to taxes. Now, the tax rate of America, the least tax rate in America is 10%. So it doesn't matter what you make, the least tax rate you pay on is 10%. And it's as high as 39.9%, then up to 40%. That's how high it is, from 10% to up to almost 40% for individuals. And so you understanding the system will determine, it's not how much you make that determines your tax rate. It's not how much you make. It's how you are able to arrange your taxes. So that's why we have a filing period in America. From January to December, we don't file taxes. From January throughout the whole year, you don't file taxes. There are specific months, which is the first 4 months of the year, from January 15 to April 15. Those months are dedicated to tax filing in US. Those are the period that we file tax. For example, now, it's actually my busiest period in the entire year. So between April 15 to between January 15 to April 15, the law compels you to file your taxes, which means you bring everything you make and you present it to the government. And based on the information you present, they determine this is your tax rate. So during the year, nobody knows his or her tax rate. So we don't know. When you make money, when you work in America and you earn money, you don't know your tax rate until this period when you file that taxes. And so the information that you include, apart from your earning, other information that you include apart from your earning determine your tax rate. And that's why when you understand this system, you don't wait until the filing period to put your tax situation together. From the beginning of the year, you start arranging for your taxes. From beginning of the year, you start putting situations together. From beginning of the year, you start presenting yourself, putting yourself in such a situation whereby at the end of the year, when you bring everything together, the tax can work to your favor. And so what we are doing today is very, very important for people that are here, for people that are coming here. And I'll give you an example. In medical field, from the medical doctors, I have clients across all industries. I have clients across all the states, all the 50 states of America. And I have clients across different, not just individuals. I have clients for partnership. I have clients for ESCOP. I have clients for SICOP. I have clients for LLC. I have clients for trust. I have clients also for non-profits. So I have clients across every single sector in America. And there's one common mistake that I find out in all of the clients is the fact that we wait until its filing period before we start asking questions. Oh, how do I do this? How about this? When you wait until that filing period, it's too late for you to do anything. So you have to now start working towards your next tax season. And so the information you are receiving here today is very, very, very important. I can't go through the whole thing. I'm just trying to give you an overview of how the system works. But when you have questions, you can ask. So let me now go back to now the tax system, because most of you here are in medical field. Now in medical field, so when you come to US or when you are working in US, the type of work you are doing determine how you will be taxed. Now I will go back again. If I made the type, that is how that job is presented for tax purpose, determine how you will tax. Number one, you can come in here and work as a W-2 employee, that is as a salary and wages earner. Or you can come in here and work as an independent contractor. Those are the two ways you can work in America for tax purpose. Anywhere you work, it falls within these two parameters, two categories. Either as a W-2 or a salary and wages earners, or as an independent contractor. Now, those two have different tax, different ways that the taxes are prepared. Those two have different tax situations. So if you're a W-2 employee, your tax situation is different. If an independent contractor, a 1099 employee, your tax situation is different. But for the sake of everybody on this platform, when you come in here, most of you, if not all of you, you work as a W-2 employee. What that means is that you work to earn salary, you work to earn salary and wages every month. And so you are categorized as a W-2 employee. So which means that from your income as you work, your tax situation is deemed as what is called pay as you earn. So which means if you're a W-2 employee, that means that when you are hired, your employer hired you as a W-2 employee, and that means that from whatever they are paying you, the law mandates them to withhold some amount of money from your income for tax purpose. We call it tax withholding or withholding tax. So when you are, first thing they do to you is a form. That form is called Form W4 as a W-2 employee or as a wages and salary earner. The day you are hired, the first thing they will give you is the form that is called Form W4. So Form W4 is the form that you fill out to explain to your employer how your withholding should be set up. So when you are hired, it's not your employer that set up or that put together your withholding. The law gives you that prerogative. It's you that determines your withholding, not your employer. So which means the day you are hired, one of the forms that we give you, the HR will give you, is a form called W4. Everyone that files taxes for one of those things I always tell them is anytime you are changing work or you are working somewhere and you are to fill this form out, give me a call. Let me help you out to fill that form. Now, what you fill in that form is what will determine what will be taken from your taxes at the end of the month or at the end of whichever way your pay period is. If your pay period is bi-weekly, if your pay period is weekly, if your pay period is monthly. So what you fill in your W4 is what will determine what will be taken from your money, from your end, from what you earn for tax purpose. Now, the implication of this is this. If you don't understand your W4 and you fill it anyhow, at the end of the year, then the consequence comes. Because when it's time to file taxes, what you fill in your W2 is what will reflect in your taxes at the end of the year. So, which means you have a tendency of filling your W2 in such a way that your employer will withhold less money from your earning as taxes. And at the end of the year, when you file taxes, you find out that what your employer has withheld is actually lower than what you are entitled to pay in taxes. That means after they have taken that money, you will still be owing the government money when you file taxes. Now, if that is the situation, your employer is not at fault because it's what you fill in into your W4 is what your employer is using to determine your withholding. And so the fault is on you. And so because of that, because you pay less during the year, like I said, the tax system is pay as you earn. That means if they pay you today, you pay government today. If you're a W2 employee. And so if you fail not to pay, that means if you pay less, by the time you file your taxes at the end of the year, the government will charge you for what you are supposed to pay that you fail to pay. They will charge you interest and penalty on it, which means for every $1 you fail to pay during the year, when it's tax season and you find out you're supposed to pay that during the year, but you fail to pay it, they will charge you for that $1, they will charge you interest and penalty. And sometimes the accumulation of both can be up to 30%. Now, for every $1 you owe, you end up paying $1.30 at the end of the year. For every $1,000 you owe, you end up paying $1,300 at the end of the year. Now, see, that's how your money, your earning is going. The extra that you are paying, you are not supposed to pay it. But because of the way you put your W4 together, so that's now putting you in a hole. And as a result, the government will penalize you for that. And if after April 15, you fail to pay that amount, they will start adding interest and penalty to that same amount after April 15. And so in a year, that amount can go up to double. So understanding that tax system is very, very crucial. Now, what happens if you fill out the W4 and your employer take more than what they should? For example, the way you put it together, your taxes during the year should have been $2,000. But because the way you put it together, your employer end up deducting $3,000 from your taxes. When it's tax season, when you file that tax, that difference of $1,000, it will reflect in your taxes. The government will refund it back to you. It's what we call refund here. Oftentimes, when you file taxes, if you are currently in US and you are filing taxes, you are getting refund. One of the reasons why you are getting refund is because of the excess withholding from your income during the year. That's one of the reasons why you are getting the refund. And if you are paying back anytime you file taxes at the end of the year, it's simply because your withholding during the year is less than what you should. And so, what should you do if that's the situation? The law allows you to go back as many times as you want to update your withholding system. That's from W4. You can go back, if you are hired today, you fill it out today, 2 weeks later, you realize, oh, what they are deducting is not what I wanted to deduct. You can go back again and refill another one and submit it. They will make that changes on your pay. So the law allows you to go back as many times as you want to, just to make sure you correct your W4. Because at the end of the year, it's going to be on you, not on your employer. So as you are coming into the US, that's the first thing I want you to understand when it comes to taxes. The first thing you don't, if there's anything you want to take from this class, presentation today, is what I just said. When you come in, or you are getting a new job, maybe you are here already, you are getting a new job, or you are currently here, the job you have is you've been on that job for 2 years. I want to encourage you, go back and check your from W4. Go and check your withholding and see how you fill out your withholding. Now, the way the Form W4 works is this. It will ask you, the first thing it will ask you is your personal information, your name, your social security number, your address. Then the next section is going to ask you, what is your filing status? What is your filing status? So there are 4 filing status that you will have on that form. The first one you have is single or married and filing separate. That's the first thing you see in that box. Single or married and filing separate. That will be the first one. The second option you have on that box is married filing jointly. Married filing jointly. You have the same thing both for federal and both for state. Now, married filing jointly simply means you are married and both of you are filing joint return. You are filing your return together. The first one I mentioned, single or married filing separately. Single means you are single, you are not married, and you don't have any child or anyone you are taking care of, then you are single. Or you are married, but both of you, the husband and wife, you choose to file your tax separately. So you choose that first option, single, married, or married filing separate. The second one, married filing jointly. The third one is what is called head of household. The head of household simply means you are a single parent. Maybe you are a single mom, you are a single dad, but you have dependents, you have kids that you are taking care of. Now, when I say dependent, qualified dependents, you can't be a single and have 35-year-old boy stay with you and you say you want to claim head of household. No. So you have to be a single with a qualified dependent to claim the head of household. Now, the last one is if you have lost your spouse, maybe both of you filed in your tax, in the past year, you filed marriage filing jointly. But for whatever reason now, you lost your spouse. Now, if you lose your spouse, the law allows you, if you lose your spouse, the law allows you to still claim the status of marriage filing jointly 2 years after the passing away of your spouse. So that is called qualified widow or qualified widower. That's the 4th filing status. So on your W4, you will have that. Now, it's so important to understand each of the status or filing status, because if you pick the wrong one, it can alter your taxes. For example, if you are single and you pick marriage filing jointly, what that does is this: it puts you on a lower tax bracket. Even though as a single, it's supposed to be on a higher tax bracket. But now, because you mistakenly fill out marriage filing jointly, that puts you on a lower tax bracket. The implication of that is that when you fill out your W4, they will be removing less money from your pay for tax purpose, even though they're supposed to be removing higher money because your status is single. Now, single in America, they have high tax bracket, single. And the reason is because being a single, you are not qualified for anything. You are not qualified for any child tax credits, dependent credits. Even if you are single and your income is over 47,000, in fact, it's over $36,000. There's a credit we call earned income credit. It's credit for the poor, for people that are making low. So if you are single and you are making over 37,000, 38,000, you are not qualified for that. So basically, as a single, you are not really qualified for a lot of credits. And so that puts you on a higher tax rate, on a higher tax bracket. So if you are filling out your Form W4, that's something you have to remember to fill out. Then the next section on that same Form W4 is going to ask you, do you have any dependents or any exemptions to claim? Oftentimes, even people that have dependents, they will go and claim those dependents. When you claim that, it puts you on the left tax bracket. But the truth is, what determines if you want to claim those dependents is how much you are making. If your income is higher and you claim those, it puts you on a lower tax bracket in your withholding. But when you file your taxes, you find out you are in a higher tax bracket. And oftentimes, I've heard people saying this to me: how come I pay tax during the year? And now I'm filing tax, and they're telling me I'm still owing tax. Everything goes down to your withholding. How do you put your withholding together? Your Form W4, that's the withholding form. How do you put it together during the year? And so those are the things that we need to understand. And so understanding that is going to save you a lot of headache. A lot of headache. And so, like I said, that's something I want you guys to remember as you come into US. When you're filling out your form, if you don't understand it, don't fill it out. Get somebody that is knowledgeable on that form to fill it out for you. And not just knowledgeable, somebody that understands tax system. Because there are often times your knowledge might not be enough filling those things out. Because somebody has to understand your tax situation to advise you on what to fill out. Every single tax season, I go through this. A lot of people. If I have a client now that send me their husband and wife, they send me their tax information to file their taxes. As soon as I open that tax information, I told myself, no, I'm not going to file this. I'm just going to tell them and say, hey, take it to somewhere else. And the reason is because we are opening, I can tell you that can you hear me?
Yeah, we can hear you. Go ahead.
Okay. So I can tell you that that family is going to owe nothing less than $15,000 in taxes. I can tell you, without even filing taxes, mere looking at their W2, I can tell. Why? Because their withholding during the year was way less than what they are making. And now, with whatever they are owing, they will now be charged interest and penalty on it. And so it's so important for you to understand that tax system. So because of the nature of people here, that's one of the reasons why I took time out to explain that withholding. Because I'm telling you the truth, you will need to understand that. That is what will make now you when tax season comes. And so if you are here in US and you are working already, and we encourage you once to live here, please go to your employer, or if you have access to your pay account, log into your pay account and look at your withholding. Or if you are here, you filed tax before, and they tell you after filing taxes, after filing your taxes during the year, they say you are still owing and you are complaining. Then I will advise you go through your withholding. Then you can notice if you notice anything different, then let me know. So I can't go through the whole picture of withholding with you. I'm just giving you the overview, especially for the sake of people here. Please, it's very important. If you're coming from US, you cannot forget what I just discussed with you. Once somebody is hiring you, they will give you that form. It's called Form W form. On top of it, you see withholding form. Please don't fill out anything until you have somebody that can explain the process to you. They are not going to force you and say, oh, you have to fill it out now. No. Even during your hiring period, you can tell them, say, hey, this form, can I reach out to somebody or to my tax expert so they can fill this out for me? It's very, very important. That is what if you fill it out properly at the beginning of the year, you can be rest assured when you file taxes, you will be in good position. The second thing I'll quickly mention, maybe let me look at the time before I give room for question and answer. Because like I said, it's a wide range topic. Maybe when you start asking questions, then we can cover some of those topics. The other thing I want you to know is this. If you are coming into US and you are single, be prepared. Your tax bracket will be high. It should be high. Your tax rate should be high. But there are things you can do. Like I said, the tax system has over 500 loopholes. So because you know your tax rate should be high, it's very, very important to reach out to somebody that is knowledgeable in taxes and say, hey, and how do you know your tax rate to be high? If you are single and you are coming in here and you know you'll be making over $60,000 a year, I want you to know you'll be in a higher tax bracket. Yes. If you are married and you know you'll be making over $120,000 a year jointly, then you know you'll be in a higher tax bracket. And so the next question is, what do I do? Your withholding your Form W4 is not enough at that point. Then it's what do I do? What are the things I can do to safeguard myself so that I can use the tax system to my advantage to reduce my tax liability? So those are the questions that you have to talk to tax professionals. There are things that, like I said, there are a lot of things that you can do to be able to do that, to be able to reduce your tax liability. And as your income increases, guess what? You have to put those systems also together so that at the end of the day, I will give you an example. I had a client that was introduced to me about 4 years ago. As at that time, they were both that client came with the wife, so they married filing jointly. So I wasn't the one that filed the taxes for them. Somebody else did the taxes. But this guy was so mad because the combined income of the couples were about $350,000. And during the year, they paid taxes of almost $80,000 from that. And when they filed taxes at the end of the year, they were still owing over $30,000. So it didn't make sense to them that after paying all these taxes, how come I'm still owing this amount of money? And so they were mad. And so they talked to somebody who happened to be my client for over 10, 12 years. And he said, hey, let me introduce you to my tax expert. And so both of them came. So I requested for their tax, the previous tax return that was filed. They sent that tax return to me. I went through it and I realized the guy that filed the taxes for them didn't do anything wrong. He did exactly what I would have done if I was the one that filed the taxes. But the only thing he failed to do further is that having realized the problem they are into, he failed to explain to them that, hey, if you continue like this, you end up being the same situation. But hey, with this your situation, these are the things that you can do. These are the things you can put together to be able to reduce your tax liability. So he failed to do that. So I explained that to them. I think this is what you should do. So the following year, we put those things together. So this time around, when they came back the following year, the income has increased from 350 to almost 450 or 500,000 for both of them. And we filed the taxes that same year. And guess what? They didn't pay back, but instead, they even had about $15,000 refund from federal, $8,000 refund from state. That's about $33,000 refund altogether. Now, Nothing changed. It's the same, nothing. The IW for still the same. The only changes we made was we put things together so that at the end of the year, those things can reduce their tax liabilities. And so if you're coming here, those are the things that you need to understand. Then I quickly want to mention some things to you. Every time you are working, for example, like I said, if you're a W-2 employee, when you're coming here, you are earning salary and wages. Every time you work, there are 4 different taxes that will be taken from your pay. Every time you work in US. The first one is your federal income tax. The other one is your state income tax. Then the other 2 that will be taken from your pay. The first one is called Social Security taxes, and the other one is called Medicare taxes. Those 2 taxes are not really, they are not tax. The law mandates everyone that works in US to pay into that account. It's called Social Security Administration account. When you come in here, if you are just coming here, or maybe you are here already, there are 9 numbers they give you. We call it Social Security number, SSN. Now, it's your personal identity number. I think they have something they call NIM now. They have something similar. So you have those numbers, okay? That number is the number is generated from Social Security Administration. So there are agencies put together to manage what is called Social Security. And so at the end of the year, at the end of your working year, by law, once you are 66 and a half years old, then you have clocked a retirement age in America, 66 and a half. So at that time, the government can be paying you some stipend, but it's not automatic. So what will determine what government is depend on what you put into that account during your working period. So that is why the 2 other taxes, the Social Security taxes and the Medicare taxes, that's why those taxes are mandated by law to be taken from your pay. So basically, it's like savings into your retirement. So when you clock 66 and a half and you are pulling that Social Security check, that is where that money will be coming from. So this time around, it's what you put into it that will determine how much you will make at the end of your retirement age. And so I've seen people telling me, oh, they take taxes from my district. And when I go through their taxes, I will realize that they didn't even pay any federal income tax. The only taxes they actually pay is just the Social Security taxes and the Medicare taxes. And they'll tell me, but that's taxes. I tell you, that's not taxes. That is actually going towards your Social Security account. So by the time you clock that age, you can be pulling something out. Government can be paying you something just for you to keep going. But it depends on what you put in there. So when you come in here and you see some taxes and you're like, oh, you are taking different taxes. Now I want you to understand 2 of those taxes actually, 2 of them are going into your future. So the 2 taxes that you actually pay is the federal income tax and the state income tax. So at this point, I'm just going to see if I can take any questions. Like I
Yes,
said,
sir.
it's a complex. Your director can still bring me here anytime later, but for now, we'll just stop here to entertain some questions.
Yes, sir. Thank you so much for that wonderful exposition. I really learned something, even though I've been here for so long. I really learned something from your explanation. And then I have a couple of questions. I think during the course of your explanation, you were able to answer one. That's the first one that was asking, will single pay higher tax, get a higher tax return at the end of the year? So I don't know if you can throw more light to it. So if you come in as a single person, will you be getting a higher tax return because you paid higher taxes during the year?
Okay, like I just explained, the reason why single are in higher tax bracket is because if you are single, you are not qualified for most of the credits that the married or the head of household qualify for, that help them to reduce their tax liabilities. You are not qualified for that. So automatically, being a single,
put you on a higher tax bracket. So that's number one. Then number two, if you listen to me when I was explaining to you that when you fill out your withholding is you that will determine what you pay as taxes during the year. It's you that determine that based on how you fill out your withholding. So if you fill out your withholding, but you fill it out in such a way that excess taxes were taken from your salary, from your income during the year, the difference is what you get back as refund. So that means if you are supposed to pay $8,000 taxes during the year, but you allow them to take $9,000 taxes. So when you file taxes, what you get as a refund from there is what? It's $1,000, the excess. So if your tax is supposed to be $10,000, but you pay $8,000 at the end of the year, so when you file taxes, guess what happened? You don't get any refund, but instead you pay them back the $2,000 that you failed to pay back, that you paid during the year. But this time around, they will add both interest and penalty on that 2,000. So that means you end up paying more than that.
Okay. All right. Thank you so much.
Somebody, I saw a question. I said, can you be more specific to the rate that are applicable to nurses? Okay. Like I said, nobody knows what rates your tax rate may be, okay, until you file your taxes. Because there are a lot of things that goes into your taxes before we know what is the final tax rate. For example, if you are a nurse, you are earning $70,000. Now, that $70,000 is not your taxable income. There are other adjustments that government will put into that, we consider before determining your taxable income. For example, if you're a nurse, you are earning $70,000 and you are single, there's something called exemptions or deductions. Government allows you, if you are single, to deduct some portion, some amount of money from that income. It's like your expense for taking care of yourself, but we call it deduction. So that deduction, there are two types of that deduction that are allowed by law. One is called the standard deduction. One is called the itemized deduction. The standard deduction is a standard one for everybody throughout the US. It's the same amount of money. If you are single, currently now for single now, it's about $13,200 now for single. So if you are single, you are earning $70,000. They will allow you to deduct that. If you are taking that standard deduction option, they will allow you to deduct that amount of money. So the remaining one is your taxable income. That is what you will end up paying taxes on. But if you have other situations that can help you to claim itemized deduction, remember I said there are two deductions to allowed. One is standard, which is the same for everyone. The other one is itemized deduction, which means if you have some situation that happens to you and you incur some expenses, there are some expenses that are allowed by law that you incur. If you incur those expenses and you add them together and they are more than your standard deduction, then you will take the higher one. Because the higher your deduction, the less your taxable income, the less your tax rate. But but none of us, nobody knows what the itemized deduction will be until the end of the year. So that's why I said you don't know what your tax rate will be until when you start filing taxes. But you can prepare for it during the year. You can prepare for it. You can put things together for it so that by the time the year ends, you will have an idea. Okay, I can claim this, I can claim this, I can claim this. For example, one of those things you are allowed to take as itemized deduction, any money you give to church or to mosques or to non-profit organization or to a charitable company as a charitable donations or contribution in US, you are allowed to take that as part of your itemized deduction. That means if you are a single and you give your church up to $20,000 for tithe and offering, or you give your mosques up to $20,000 for donation, guess what happened? That $20,000 can now come as your itemized deduction. That means instead of you claiming the standard deduction of 13,002, you claim the itemized one. That reduces your tax, your tax liability. But you don't know what that amount will be until the end of the year. Maybe you incur some medical expense that is up to a 5.5% of your adjusted gross income. There's something called AGI, adjusted gross income. You can take that portion of medical expense that you incur as part of itemized deduction. If you have a mortgage, you pay interest on that mortgage. That interest you pay on that mortgage, you are allowed to take that too as itemized deduction. So if you have all those numbers and they're higher than your standard deduction, then you claim that and that reduces your tax liability. So that's why I said you can't really be specific at the beginning, this will be my tax rate. A lot of things have to be factored in. For example, if you have a business, you own a business, and that business makes losses, you can take those losses, you are allowed to take those losses from your regular income to reduce the taxable income. So a lot of things goes into your taxes to determine what your tax rate is.
Wow. Wow. So guys, I hope you're learning a lot from this program, because HR taxes will not give you this. It's some of you that go to the HR block, you go to HR blocks and then you have them file your taxes. They won't give you the kind of information that Mr. Ade is giving us today. So I just want to say thank you, sir. It's just so much information to take in. But let me just scroll up a little bit. I have some other questions before these ones. There's one very interesting question. I believe, Komi, I believe your question was answered correctly, and I hope you are cleared on that. If you're not still clear, please kindly expand on your area of clarification. And then we have Kainde. Kainde is asking if your family, and this is something that is a real life situation, said if your family, that is husband and children, are to join later, like the wife is here in the US, but the family is still in any country where they come from, and they are to join later. It says, will you select single or will you select married during your filing season?
Okay, so if you have family members, but they are not here with you, they can't be part of your taxes, because there is something called residency text on your tax return. Okay, if you are single and you are single here, but you have family, you have children, you have all outside the US, you can't put them on your tax return. You cannot. They have to be here to have what is called to pass what is called the residency test. Number one. Then number two, they have to have social security number, or at least ITIN number, to be able to be included into your taxes. If they don't have any of the two, they can't be included on your taxes. That means for now, you will still claim single until they come over here to meet you. Even though we know you are married, but for tax purpose, the tax status is not your married husband. No. It's your tax filing status is different from your this thing. So, which means you may be married, but if your situation does not meet all the criteria for marriage filing jointly, you can't claim that. And one of the criteria is anybody you want to claim, number one, has to pass the residency test, and number two, they have to have at least ITIN or social security number. If they don't, you have to be filing you have to be filing single until the arrival.
Wow. Okay, guys, thank you so much. That's something new that I've also learned today. So yeah, if you asked me this question before this presentation, I would have said file married, but knowledge is something that you can't just refute when it comes from the right source. So now we have another question that says, what percentage of workers' income goes into withholding? So I think you kind of touched on it a little bit, but if you can throw more light on it,
okay. Sir. Let me explain this to you. I mentioned something now when I was talking. I said that I have a client of mine that just sent their tax this thing. Mere opening their tax document, I can tell that they are going to be owing. Why? Because they are, when you've, after, at the end of the year, for a W-2 employee, they will give you a form, a tax form called Form W-2. Now, if you are here in US, I want you to listen to me. It's very, very important. If you are here in US, you must have received that form, Form W-2. Anytime you open your Form W-2, you have what is called box number 1, box number 2, box number 3, box number 4, box number 5, box number 6. Then you have box number 15, 16, 17. Those boxes are very, very crucial. Now, box number 1 is where your wages goes. Box number 2 is your federal income tax. That is the one you determine based on your withholding. Each time you look at that and you look at what is the amount in that box, and you look at what is in box number 2, look at what is in box number 1, and what is box number 2. Anytime it's less than 10%, 10% of what is in box number 1. For example, if box number 1, you have $20,000, which is your wages for the whole year. Box number 2 is where you have all your federal income taxes. If you have $20,000 in your box number 1, and you look at box number 2, and you realize it's not up to $2,000, what that tells you is that your tax rate based on that is under 10%. And if we have established that the least tax rate in America is 10%, so that's to tell you that automatically you are digging yourself out of the hole already. Because what you pay during the year is less than 10%, which is the least tax rate in America. So if you have that, if you are here now, once we finish this, go and pick up your W-2 and see that. Now, if you find out in your box number 1, your income is going to $70,000, $80,000, you are single, and that box number 2 is about 10% or less, you will definitely owe. That I guarantee you. But if you look at that box number 2 and it's about 15%, then you can relax. It doesn't mean you may not owe, but it means that at least you've done what you're supposed to do during the year. Now you have to depend on using what I call the other loopholes to cover that.
Wow. Okay, thank you so much, sir. So also there's someone that also asked question about tax credit before now. So he was asking, yes, what are the what are the qualifying things that can be regarded as the tax credits?
Okay, the tax credits. Okay, so tax credit is basically some credit that you are allowed. It's not, tax credit is not like free money. The word credit means that it's to reduce your tax liability. So they allow you some amount of money based on different scenarios to reduce your tax liability. That means if you are supposed to owe government $10,000 and you have a credit to qualify for $7,000, then that $7,000 is used to reduce that tax liability from $10,000 to $3,000. But if during the year you have paid that $10,000 as part of withholding, then that $7,000, you claim it now as a refund. Because oftentimes people think when they get refund, it's free money, free money, free money. And I tell people, I say, no, it's not as if government is just throwing money. Those credits are there just to reduce your tax liability. The reason why people get that refund is because they are not owing. If you are owing, then you use that to cover it. That is why you can't say somebody that is earning $300,000, $400,000 getting refund, except if they have paid more than enough of withholdings. That's why. So tax credit is, like I said, is what government gives you to reduce your tax liability, and there are a lot of tax credits. Now, I will go to the major ones for the sake of people that are here. If you have a child, there's something called child tax credit. If your child is age 0 months, 1 month, up till on age under 17, under 17, that child is qualified for a child tax credit of $2,000. If you have 3 or 4 of them, they qualify $2,000 each times 4. Actually, it's limited now. It's actually limited to 3. If you have, I think it's up to 4. Now, if you have 5 children, you can only claim it for 4. It's limited now. Okay, so $2,000 each. So that's number 1 credit. So basically, most people that get a refund, this is why they get refund, that particular credit. Okay, now the credit also has limitation. The higher your income goes, the more it phases out. Every credit you get in America is based on income. So anytime your income is growing higher, that credit, some of those credits will be phasing out. You will no longer qualify for those credits. And so the credits that you have to get, so that's the child tax credit. The other credit that we have is what is called earned income credit. That is the biggest credit that everybody that gets refund and they are under low income, that is where their refund comes from. Okay, so it's based on, number 1, how much you earn in a year as a couple. I saw a question that just came through. Somebody was asking, I will answer that question with the explanation. Somebody was asking, do you file marriage separately or marriage filed jointly? Which one is beneficial? So I'm going to explain that now. So to answer that question. So most of the credit that we get, if you file marriage filing separately, you will not qualify for most of those credit. The reason is because government wants you and your husband, or you and your wife, you and your spouse, to work together. And so the way of bringing you guys together is to kind of compel you or encourage you to file 2 taxes together. And so those credits are tied to you using that filing status, marry filing jointly. You cannot qualify for the earned income credit, the one I'm talking about now, which is the biggest credit that people get if your income is low. So how do you know what is low? It depends on how much you earn and how many people are in your household. The more people you have in your household, the more that parameter favors you. If you are 2 people, only husband and wife, the earning, so your income criteria to qualify is low. That means if you make like 37,000, you are just husband and wife, you qualify for that. And that credit you can get as high as over $7,000 for that credit alone as a family. Like I said, it's based on, number 1, how much you earn. Number 2, how many people are in your household. That determines that. So that's the biggest credit that people get, earned income credit. The second one is what I just mentioned, educational credit. So everybody on this platform now, those are the credits you receive anytime you file for taxes. And those credits are income, they have income limitation. The higher your income, the less qualified you are for those credits. So oftentimes when you hear people making $200,000 as a couple, they really don't qualify for much. Another credit that people claim, which I'll quickly mention, is if you are in college, you have a child in college, or you are in college, maybe when you come here, you want to go back to school, you are in college. If you are in 4 years degree, that is undergraduate, you qualify for credit. And based on your school fees that you pay out of pocket, you can get maximum of $2,500. If you're undergraduate, if you have 3 children and all the 3 are undergraduates, you can get up to $2,500 for each. That's 7,500 credit. But mind you, that credit too has limitation. If your income combined as a married filing jointly is over $180,000, you are not qualified for it. Even if you incur that expenses, you are not qualified. Number 2, if your income is less, but both of you decide, maybe because you are not happy with your husband, You say, you know, how to find my tax separate. Let me go and find my tax separate. And you find your tax separate, husband find his own separate, then you are not qualified for that credit. If you are single, your income is over $90,000. You are not qualified for it. And that credit also goes if you are doing your postgraduate, you are doing your master, you are doing your doctorate degree, you also qualify for up to $1,000 of that credit. Provided married filing jointly, your income is under 180, or single, your income is under 90,000. So those are some of those credits. If you have house and you put solar power on your house, you can get credit too. We call it energy savings credit. It depends on how much you put into that determine how much credit you get. You get that, but that credit too is limited to how much of taxes you owe.
Wow. Thank you so much. Thank you. I can't even thank you enough for all this information. Well. So you guys are, keeping the comment section lively. I've been seeing a lot of questions, and I also know that our guest is a very busy person. So I have to find out from you. Do you have time for us to take more questions, sir?
What's the time now?
It's 11 past 1 p.m.
Okay. You told me 1 hour initially.
Yeah, I know. That's why I decided to pause a little bit to, verify from you if it's still okay. If it's not,
let's do to 1:30.
You said?
Let's do the 1:30. Let's do it
Okay,
to 1:30.
Thank you so much. I really appreciate it. So now, guys, if you have questions, you can drop them now, and we'll take everything together. But the one we have now is from Vincentia. Vincentia is asking, say, thank you, sir, for the presentation. So since there is a tax refund, is it right to deliberately pay higher in order to get a refund at the end of the tax season?
In fact, I will. That question is probably one of my favorite questions. Whoever asked that question is a smart person. Yes, because see, maybe that person came late when I was explaining. When your withholding is less, the difference you owe, the government will charge you interest and penalty on it. For example, if you are supposed to pay $10,000 during the year through your withholding, but you only allow your employer to take $7,000. That means you are owing $3,000. When you file taxes, you don't pay that $3,000. You pay more. You pay interest and penalty on it, and oftentimes it can be as high as 30% of that amount of money. It doesn't make sense to me. The money you will end up paying. So why keeping it and not paying extra on it? Instead of that, why not allowing them to take as much as they want to take during the year, so that at the end of the year, whatever difference, they will refund it back to you. I always tell people, you cannot go wrong with that. You cannot go wrong. That's why there is a section in your Form W4. After filling it out, you come to a section, it will ask you, do you want your employer to be taking additional money from your pay, apart from the withholding, to be taken extra? And if you say yeah, they'll say, how much do you want them to be taken from each paycheck? You can put it there. So the reason they put it there is it's better you allow the government to take as much as they want to take during the year, so that at the end of the year, it's better you don't owe them. If you owe them, you pay more. If they owe you, they will pay you exactly what they owe you as part of refund. That's number one. That question has A and B answer. That's the A answer. The B answer is this. If you're a businessman and you know you're a businessman and you know any money that comes to your mind, you can turn it around to make money. Guess what? You can put your withholding at zero. You may choose not to pay taxes at all during the year. So which means that what we are trying to say is the money you want to pay government during the year, you know they will pay you, they will charge you interest and penalty on it. It's okay. It's not a crime. You are not going to jail for that. They will just charge you interest and penalty. But that money, you think instead of paying the government, you want to put that money into your business. And you know that business can generate more than whatever penalty and interest government will pay you. Then guess what? Be my guest. I'm a businessman. I have businesses. Your director can tell you. When I put my withholding, I don't work for anybody. But my wife works. She doesn't pay any withholding because I use that money for business because I know I can make more. Even that interest and penalty, I will pay the government and I will still have extra left over. So you can do that if only you were a businessman. In fact, can I tell you guys the truth? I've been filing tax for almost 20 years in America. I'm still getting refund. And your director can tell you my tax situation is skewed. People will ask me, how do you still get refund? And not because I'm making any numbers up. No. It's because of my understanding of the tax system. That's why. So that question that person asked, please, my advice is for most of us, let them take as much as they can during the year. At the end of the year, whatever difference, they will pay you back as refund. But if you know, hey, no, I'm a businessman, I can put this money and turn it around and make more than that, be my guest, you can do that. But guess what? I will not advise you if you are not a savvy business person.
Thank you so much, sir. And the last question we have on the comment section is from Lucky. Lucky said, can you do without credit or loans in the US? Which one is advisable? A lot of people ask me this question too. You know, okay. Nigerian system, we don't owe. When we have money to buy a car, we go pay for it and buy. So, okay. Yeah.
Okay, my brother, let me ask you a question. Let me say this. I'm also a financial advisor. Yeah. I have a major in finance here in US. American is a system. Please, American is a system. In fact, please, whoever asked that question, I want you to listen to me today. And I want everyone that will be coming to listen to me. When I came into this country almost 20 years ago, the first thing I did was to understand the system. And I'm telling you, today, it made all the difference. Every decision I have made in America so far up to this point has to do with my understanding of the system. When I buy cars, it has to do with understanding of the system. When I bought my houses, all the houses I've ever purchased, it has to do with my understanding. Sometimes when I tell people how much I pay for mortgage, it drives people crazy. They're like, what do you mean? We have the same house. Why? How much I'm paying 3 times your mortgage? Is understanding the system. So I will go back to that question, and I want everyone that will be coming to US, please listen to me. American is a system. And the way that system is designed in such a way that, number one, you cannot do without credit. You cannot do without credit. If you want to go far, yes, I know somebody will tell us, no, you don't leave it to them. Guys, there's something called leverage. You using other people's money to your advantage is how this system is designed. Yes, we call it credit, but unfortunately, because of our understanding of it, we have bastardized that system. That many of us, that thing has become an issue to us, that we have so much people with debt in America. But sincerely speaking, it shouldn't be when you understand that system. So my brother or my staff, whoever that person is that asked that question, you can do without it if you want to. But guess what? You won't go far in America. Because the system is not designed for you to do everything by cash. Yes, in Nigeria, that's the system, that's where we came from. But that's a different system. This system is not designed for you to use everything you want to do, you use your money. It's not designed. It's designed for you to use other people's money. But guess what? That thing has destroyed so many lives. But it has also transformed so many lives. And I can tell you that I am an example of that. When we came into US, I'll quickly say this to you. My wife and I, like I said, that's the first thing I learned. I learned the system and I realized the power of credit if you know how to use it. And so my wife and I, every single time I apply for something, maybe want to apply for credit card, I will only put my name there. I will apply under my name. If I'm approved for that credit, I will now call them and ask them to add my wife as joint, as authorized user of that credit. And so what that does is this. Since they've approved me now, as I'm building, my wife is building too, so we both owns it. But anytime I apply and they disapprove me, because if you apply and they reject you, it also have an impact on your credit listing, because they keep the record of how many people say yes and how many people say no to you. The more no you get, the higher your risk. And so what I learned from my onset in America is, at any time I'm applying for any credit, I use my name. Once they said no to me, guess what? It's only me that's getting the no. The no does not arrive because I didn't put my name there. But once I say yes, get happen. Once I say yes, I put her there. After 2-3 years, for every no I get, it has negative impact. But for those 3 years, my wife has the perfect credit record because she never had any no on her credit. And that's the leverage that we use. That eventually, it turned out to be one of the best decisions that we ever made. It is a system, I can't explain it clearly. If at the end of the day you have a question, my email is there, just send me an email. But hey, whoever asked that question, yes, without credit, no, but no, you may not go far.
All right, thank you guys. As you can see, his phone has been buzzing since he started this show. I know he's very busy. I just put his number out there for those of you who are in the US. If you are not in the US yet, just wait until you get in. Save the number. When you get in, you can call. But
if you're in US, before you call, send me a text.
Exactly.
And introduce yourself and say, hey, I'm from this class. I will be calling you, then I can. Because like I said, I receive tons of numbers, so I don't really pick those numbers until I see the message.
Yeah, and I don't want your number to displace mine when I'm calling him. So, and like you said about people using their debit card, I've seen somebody who from Nigeria, he made up his mind that when he comes to the US, he's not going to use credit. And he came here, he was using debit for everything, every single thing. And he got to the time to buy a house. And he was told that he wants to buy a house, and you have to pay the entire money because there's no credit with which lenders can lend you any money. So you can imagine, trying to make that kind of big decision in life and there is no support from the banking system because you don't have a record there. So, you cannot, if you really want to, you can, but is it something good? I would say no, because also, I've also seen me personally, if I use my credit card, at the end of the month, I get close to $200, $300 of credit, that they give away rewards, credit reward just for using the credit. They also give you a reward for it. And those rewards can be put into paying down the credit or doing any other thing you want to do with the money. So it depends on how you want to look at it, guys. But I feel that credit is something that once you get in, like our presenter said, once you get in, get a credit card and start building your credit so that you can be able to make different purchases. Just learn the system, like he said. And when you learn and understand the system, you will be able to, take advantage. It's a leverage. Take advantage of the system for your own good. I think we've done a lot of justice to all the questions that was posted here today. And I believe that all of you have learned so much from our presenter, Mr. Ade. So I just want to thank him so much for joining us today. And I wanted him to just give us one final word. So like I said, when we were talking during the course of our conversation, a lot of people from the US, from other countries joined this meeting, and some of them were requesting for your number. I know them personally, so I sent your number up there. They will be calling. And also I wanted you to say, just one last word, one few comments, to them. This is a new venture. A majority of the people that are coming here don't know what they are up against. And tax is one of the things that once you understand it here in the US, you have laid a good foundation for your financial growth. So, sir, coming from a 20 years experience, sir, I know a lot of things have helped you in your journey here in the US. I just want you to kind of pour it into my audience today. You know, what few words can you give someone who just recently got into the US?
Okay, thank you so much. I think I mentioned that before. Please, if you are just arriving in US, you will find so many people giving you different advices. In fact, 99.9% of those people don't even have a clue what they are telling you. It's what somebody said and they are repeating to you. Please, I beg you, don't take any advice and run with it. Double check, triple check, quadruple check any advice, especially if it's not from a professional. Oftentimes, please get somebody that will connect with a professional. You cannot go wrong with a professional. You know why? Because they are liable for giving you wrong advice. You can't go wrong. That's number one. Number two, please don't cut the corner. Don't take shortcut in America. That shortcut end up becoming the longest journey you will ever take. People will give you so many advice to take shortcut. They will even advise to do something that even deep down you know that thing is not true. This system, you can't beat the system. I'm telling you, you can be running from the system, but when it's time for that system, it will catch up on you. You can't beat that system. So please don't do that. Then number three, you cannot play with taxes in America. I'm telling you the truth. You know, I always tell people, I said there are over 500 agencies in America, federal agencies in America. But anytime you see a phone call and they say, hello, this is from you don't want to wait to hear RS. Before you hear the RS, you're like, okay, what is the most dreadful agency in America? In fact, more dreadful than FBI. Mm-hmm. Because see, IRS will come to you, even you may not even have a clue if you've done something wrong. They will come to you. Please, the tax system in America, make sure you understand it. And most importantly, I'm telling you, if you understand this system, it works like magic. And you will enjoy it. As complex as the tax system is, I always tell people it's the best thing I've come to appreciate in this country. Because if you understand it, you will use it to your benefit. You will use it to your advantage. It can actually make this tax system can make you rich. And I'm telling you the truth. It can make you rich when you understand it. And so that's what I would just say for now.
Yes, thank you so much, sir. We really appreciate you. This is awesome. I don't know, but my knowledge about the tax system in the US has really increased. You've really done justice to this topic, and I want to say a very big thank you to you. God bless you so much. It's quite an interesting, and all the questions that came in were just on point. Thank you to all the people that asked the question. It was nice, hanging out today and learning about the tax system in the US. And I also want to say a big thank you. Guys, you can use the comment section and just say thank you to our guests. We hope that we're going to do another one, which is going to be more concentrated with people who are in the US. But believe me that people are going to call you, especially those that would listen to these recordings after now. They would reach out to you and ask for some kind of support. And I believe that you'll be able to render it to them. Thank you so much for that. And then to all the people that expected us to have our virtual hiring event today, I'm sorry. I was mistaken when I kind of mentioned that it was today. It's 28th of March. So 28th of March will be our virtual hiring event. And then next week Friday, we're going to have people from Green Solutions Consult. They'll be coming here to give information about how you can get admission here in the US, how you can come here on F1 visa. So that will be people that I will be having on Friday. Friday next week. They will come prepared. Just come prepared. If this is something like an option that you're, hoping to have, or you want one of your siblings to benefit from it, so just come next week. We'll be able to expand more on that. So today, this will bring us to the end of the meeting, and we are so grateful that Mr. Ade was able to join us today. Not just joining us, he's a very busy person. His time, here in the US, time is money, and we're not paying him for this time that he's spending with us. But we just hope, that with time, if we call him again, that he will be able to listen to us and give us and come to our program again. So thank you guys for joining. I really appreciate your presence. Thank you, sir. God bless you. And this brings us to the end of the program. See you all next week. Bye.